Okay, folks, so we got to give a violent update on the market and plays, and boy did it get very violent out there. In fact, there was quite a bit of teasing, and you Mara folks know exactly what I'm talking about. We already knew that Mara was a dirty tease, but is she also a dirty liar? Well, we'll talk about that. And then number 2 for the main entree, I want to talk about one specific metaverse stock that has been going up very, very consistently. I'm going to give my breakdown on it and why I see it as a very, very interesting play. And the only thing that I ask in return for all of this is that you hit that ravishing like button, and also don't forget to subscribe either. Also, a quick reminder, our $100 off ZipTrader U Black Friday sale has started. If you are looking to join us, we'd love to have you, and typing in coupon code BlackFriday100 before checkout will get you $100 off and also lock in the one-time fee at this price before we raise the total cost of the program. Of course, this includes all future updates to lessons, our private chat, our daily morning briefings, as well as price targets. I'll go ahead and put the link below if you want to check it out. Okay, update. So Lucid was the big story today. And yesterday we talked about 3 things that we wanted to see: an update on demand, production, as well as any updates in terms of how they're managing costs. In terms of what blew us all away today was demand. Today they reported surpassing 13,000 reservations in Q3. If these are the reservations that Lucid can do prior to showing proof of concept, because this quarter ended before they started even delivering, imagine what sort of pre-orders they're going to be doing in the next couple of quarters as these cars are actually on the road and are getting a ton of positive coverage. Not to mention the fact that the Lucid Air was just named Motor Trend's Car of the Year, citing everything from looks, safety, competitiveness with other vehicles in the segment, and overall efficiency. The earnings report goes on. Customer reservations have rose to 13,000 in Q3, and here's the important part, and have since increased beyond 17,000. So just from the end of September at 13,000 in Q3, September 30th reportings, it's up another 4,000. Talk about demand. After so much back and forth and FUD with this stock, it's great to see Lucid acknowledged. Now, in terms of guidance on production, which was the other important part of this earnings release, you already know that our bull targets on Lucid are based on them being able to ramp up production to starting 20,000 units in 2022, or over the year of 2022, 20,000 units delivered. And this is what they said. They said, we remain confident in our ability to achieve 20,000 units in 2022. This target is not without risk, given ongoing challenges facing the automotive industry with global disruptions to supply chains and logistics. We are taking steps to mitigate these challenges, however, and look forward to the launch of the Grand Touring and pure versions of Lucid Air through 2022. Obviously, you only have so much under your own control. You could have the best factories in the world, but if somebody that manufactures the materials that you use for manufacturing your vehicles isn't able to provide those materials anymore, then obviously you get a little bit of a halty-halt. But in terms of what they can control, it sounds like they're doing pretty decent. And the reason that I really say that is because you look at the citations of what they're doing to increase production capacity. They reported expansion of the capacity of their AMP1 factory to up to 90,000 vehicles per year by end 2023, and cited the current capacity is roughly 34,000 vehicles per year, so they certainly have the capacity to meet these guidelines and a length of time to make it work. So in any case, pretty good news, on track to meet expectations. I have to tell you though, again, it's very, very frothy in valuation. It's factoring in my bull case targets already. Keep in mind that with every growth stock that we talk about, you have these insane euphoric cycles that everybody just keeps buying the tops and tops and tops until they don't anymore. And then they plummet massively and people are like, growth stocks are a scam. But in order to actually acknowledge a growth stock, you have to say, hey, wait a second, this is a growth stock. It's going to have massive cycles in both directions. So I'm going to build conviction in it. And when it's really, really oversold, I'm going to buy it. And when it's really, really overbought, I'm going to sell it. Now, I'm not going to say that Lucid is extremely overbought. I just think it's at a fair value where it's not really compensating you much for the risk ahead. And it's assuming that everything's going to work out exactly like we expect them to. You get a supply chain shortage, you can get a couple quarters of bad trading. I said the same exact thing that I just said with Lucid with EVgo last week. I said, hey, I love EVgo. It's a damn beast. But you're factoring in so much because there's a euphoria cycle. And then today, Credit Suisse said the same thing, but unlike when I said it, Credit Suisse has the power to tank the stock when they say it. But in terms of unexpected teasing, now it's time we talk about Mara. Mara's back down today after her unprecedented 8-week rally. You never know exactly when or why Mara's gonna tease, but you always know she's gonna tease. Firstly, she's selling bondage. Bonds to buy more Bitcoin and mining machines. Bitcoin enthusiast and MicroStrategy CEO Michael Saylor tweeted out, A publicly traded Bitcoin miner, Marathon Digital Holdings, is raising $500 million in a debt offering to acquire Bitcoin and Bitcoin mining machines. This is not factored into anyone's model. And right here is most models, including mine, are judging Mara's growth based on a 13.3 exahash per second hash rate. If they spend more money and invest more in miners and they increase the amount of power they have on the network by acquiring more Bitcoin, it's certainly possible that that number could be higher. In reality, this is likely to create a lot more value down the road. However, the other piece of news which really sped up the accelerated downtrend, and is quite frankly terrible in my opinion, is Mara's disclosure of an SEC subpoena or request for information regarding their hardened facility. It says on October 6, 2020, the company entered into a series of agreements with multiple parties to design and build a data center for up to 100 megawatts in Hardin, Montana. In conjunction, they issued 6 million shares of common stock, blah, 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 blah. And then during the quarter ended September 30th, 2021, certain executives received a subpoena to produce documents and communications covering the Hardin, Montana data center facility back from October 2020. We understand that the SEC may be investigating whether or not there may have been any violations of the federal securities law. We are cooperating with the SEC. My thoughts, well, when Mara signed these documents back in October 2020, she was trading at about 1/80th the price and 1/80th the valuation. Since then, it's grown from a $78 million company to an $8 billion company at highs. Generally speaking, early stage companies that don't have a ton of money on their balance sheets will not have the money to invest in massive compliance departments that can tell them exactly to a T what they can and can't do. And that means sometimes the compliance measures just aren't where we'd want them to be. Mara has transformed into like a nothing company to a massive player in a very short time span. Do I think it's possible that she made some mistakes along the way, especially before she had a ton of capital on her balance sheet? I absolutely do think it's possible. Is it true that at the end of the day, this subpoena request is probably more bark than bite? Yes. But the real problem now is that you have this looming cloud where people are like, well, wait, what if the SEC finds something wrong with Mara? What if they have a fine? And that fear is now spreading to a lot of other crypto miners. You saw Riot and Hut 8 sell off today. And I think that this subpoena to Mara sends a very clear message that, hey, the SEC is now looking at all miners, and it's now looking at any crypto-related company. At the end of the day, what happens to companies that get these subpoenas? Well, all of a sudden you get a massive swarm of ambulance-chasing lawyers that then go and try to sue the companies and say they did something wrong, and regardless of whether these companies did anything wrong, they're going to get slashed with massive bad PR headlines week after week. But at the end of the day, I would put this into the regulatory FUD category. You have the SEC that's trying to figure out how they stand in terms of regulating crypto and crypto miners, and they're saying, okay, well, we're going to flex on publicly traded companies that mine crypto. That's an easy way we can do it. At the end of the day, though, I mean, like we were saying on Friday's Hut 8 video, we love crypto miners. They have a lot of potential, but most of them are very frothy. Whatever it is that knocks them down to valuations that make sense for dip buys is a good thing in my opinion. Mara is down a little bit, but she's only down a couple of weeks in valuation. We've liked her since 11 bucks a share. She's gone up and down massively over and over again. I think there's like 4 different cycles where she lost 50% of valuation from each new high. So as always, my take is, hey, if you're a high conviction trader, you did the work on this, you look at the deployment they're going to be doing in mid-2022 and especially into 2023 when the numbers start really impacting the bottom line and the potential boost of deployment based on this new debt offering. And I would argue that she's going to be providing a lot of value. So if we do get a bear cycle from Mara when the froth really completely dies off, it's going to be looking like an obvious buy. Okay, lastly, the main entree. So since Facebook decided to switch their name over to Meta and drive a push to augmented and virtual reality, there's been a huge buying spree of anything metaverse related. The concept of the metaverse obviously has mind-blowing implications, and as a result can cause massive capital flows into any companies that can make the metaverse happen. At the same time, though, it's so early stage and out there as a concept that it's difficult to find anything that's showing real proof of concept. But one recent one that I really like that has been climbing is Matterport. MTTR. And what do they do exactly? Well, essentially their 3D platform takes any physical space and transforms it into a digital version. They use a combination of compatible cameras and AI to stitch together really accurate virtual representations. And because they have compiled so much data from so many different clients, they also have the biggest spatial data library, which allows them to outcompete any newcomers. If you've used a virtual home or hotel tour or even a museum tour online, you've probably used some of Matterport's technology. The proof of concept they've shown with the clients they've worked with and the massive amount of AI data reference points they've developed makes them a very interesting play in regards to a metaverse. Not only do you have an actual business now, but you have a business that can develop into something more meta in the future. The Matterverse. What's especially unique about Matterport is they're showing a lot of proof of concept. They work in many different industries: retail, real estate, travel, construction, corporate, industrial, commercial, hospitality. Their software can be used to help design, build, promote, operate, and insure. But how do they make money, Charlie? Well, mostly from subscription revenue to their software and AI, but also from licensing, services, and products. That said, anyone can make a camera, but making a software that's applicable to many cameras and works across platforms, even smartphones, is key. And that's why you have to make an argument first based on the software here and their AI and their data points that the AI can use. In terms of growth, they saw their biggest jump when they launched Matterport for the iPhone, and they just recently launched Matterport for Android, which suggests another bolster. They've also had a steady climb in most relevant categories. But make no mistake, this is running on metaverse euphoria right now. It's factored in a few years of sales, and it's running on the metaverse. And why have investors plowed money into this expecting it to be a metaverse play? Well, back in June, Matterport and Facebook AI Research collaborated to release the world's largest data set of 3D spaces. And with Facebook's rebranding and commitment to spend billions of dollars accelerating the metaverse race, it's highly likely that the leader in creating 3D spaces, of which they already have a partnership with, is going to benefit. My take and my projections, well, when it comes to the metaverse, at the end of the day, I think there's no doubt a lot of meat to this, and I think it's going to be a massive, massive industry. I just think it's a lot farther away than we'd like to admit. So my take is that if you're going to invest in the metaverse, you're going to want to do it with companies that are actually showing early stage metaverse utilization right now, of which case Matterport definitely is. And at what price would Matterport be a buy? Well, I'd argue not right now. It's factored in years of sales, and the only reason is because you have a lot of euphoria momentum traders trying to profit off this and plowing into it. I would say that when the momentum traders in this decide to cash out and go home and it sells off massively, that's when you want to start looking at it as a buy. You build the conviction now, do the research now, put it on a spreadsheet that says, okay, these are stocks that I want to buy at certain price points. You list the why you want to buy them and the price points at which you want to buy them at, and then when they hit those price points, then you buy them. Anyways, folks, that caps off the video. If you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. If you'd like to learn how to trade with our step-by-step lessons, our private chat, and of course our daily morning briefings, well, I'll go ahead and put a link to ZipTrader you below. Of course, we do have that $100 off Black Friday 100 coupon code discount. So if you are interested, this might be the time to do it. So go ahead and check us out below. We got a video that walks you through the course and what we offer. Anyways, that caps off the video. Have a good one. I'll see you in the next one.